the market must be believing that inflation is coming down rather than going up. Because if you believed in what the Fed's saying, that they're going to end up at 2.75, we're still too low on the rates as a practical matter.
Absolutely. And I think when you look at the hard data that underlines all this, the U.S. economy is 70% driven by consumer spending. You have an average hourly earnings growth for people who would generally be considered marginal spenders that's kind of stuck at 2.5%. You also then have a much lower savings rate, and you have record high debt for the consumer. So their ability to spend more and have disposable income increase so that they can grow consumption is really been constrained. So that's generally where you would see some inflation in this type of economy, but we're not seeing that. So I think the market has already discounted that in, and the Fed is kind of still sticking to that longer run concept that we have very low unemployment, we could be very well at full employment, so inflation will eventually have to pick up and wages will have to eventually grow.
And Jim, the curve's capturing that story. 230 spread is narrowing down to 136.
Yeah, so
how flat are we going to go?
Well, see, that's the thing, right? So if the Fed does what they say and they move to 2.25%, that's about where the 10-year Treasury yield is today. And even if you look at the forward markets, it still says that a yield curve 2s to 10s would be between 0 and 25 basis points, which would tell you that historically is typically where the Fed ends their cycle. But there's a very, very key element to, I think, what we're all talking about here. Is the Fed becoming more mission focused? Are they on a preset course to hike rates almost no matter what and unwind the balance sheet? And are they becoming less data dependent? Because I was of the assumption that they're more data dependent. Why? Because they've told me that they're more data dependent. Are they telling us something different now? That's what we have to reconcile, and that's where I think the volatility can come into the markets.
What do you make of the fact that they lowered their terminal rate?
It didn't take much to do that. It took two voters to do that, to just lower their long-term rates, and that brought down the terminal rate to 2.75%.
But we talk about a global reflation story.
Yeah.
A terminal rate of 2 3/4 doesn't tell me a global reflation story.
Yeah, that's exactly right. So I think it's more of a marking to market of just the recent low inflation that's come out. There is some concern, I think, even within the Fed that perhaps they may be too aggressive. But look, we're also going to have a new set of players, going forward too. And I think maybe what the market's actually telling you when we looked at that market chart is that they don't believe that the current set of players are actually going to be dictating what the new set of players are actually going to do. Another source of volatility for the markets.